Everybody, making sure my microphone's working. How are we all doing? All good? Afternoon, Chris. Afternoon, Trading Tower. Very tall, obviously. Today we've got the non-farm payroll. So we're on a bit early this Friday. Normally we come on at 2:30, but we're going to watch the chaos unfold this afternoon. We've had some movement today since this morning's live room on the Swiss franc. We had a really big spike come in for some reason on the Swissy. No idea why. There's nothing really on the news that I could see, and it was a bit of an odd time. It came in at 12:30, so which is 10:30 this morning. I couldn't see anything in the news around that time, but we had a big order coming on the Swissy for some reason. But anyway, so we had Eurozone CPIs this morning. We've got Ishiba rather saying that they're not happy about the Japanese tariffs. Look at that. Everybody else is exactly the same boat. But yeah, anyway. So this morning's price action, the vast majority of movement that you can see here on the ADRs, if you look at everything, we've had some pretty big moves. Well, I say fairly big moves so far today. Lots of trending moves. I suspect this is all selling off ahead of non-farm payroll, but it's difficult to tell. So we'll go through the ADRs and the weeklies in a minute. And see where we go from there. This morning's trades, the DAX, zoom out a minute. So the FTSE was an absolute waste of time this morning. The DAX was a waste of time for most of this morning. Where's my pen gone? All the way down there. So yeah, the FTSE this morning, we put in a fairly big old range this morning. It was just shy of 20%, 40% of ADR. So it's a big move, and obviously that's literally the price action today. So got one trade on that, short, stopped out, didn't go anywhere, hasn't triggered the long yet. So we'll see what happens with non-farm. Obviously the indices tend to get a big spike on non-farm payroll. So we'll see where we go. We could potentially get a break long on that. The DAX, we had very much the same this morning on the DAX. The wicks this morning, so got stopped out on the short. These wicks, look at it. Absolutely awful price action for the first sort of 30 minutes. And then we attempted a break long, got pushed back, managed to get out. But I mean, it's like a stuttering car this morning. It just couldn't get going. But I am long. So I'm at break even on the morning. I'm toying with the idea of closing this out at a break even. But the greedy part of me is saying, if the DAX pops, we're going to make a load of money. So I've got it protected at break even. So worst case scenario is I'm not going to lose any more than this morning's move, which is fine. Best case scenario, it's going to fly. So we'll see where we go, see what the indices do. Could just get whipsawed out. If that does fly long, I suspect we'll get a long on the FTSE as well. So it could actually turn into a good session, but we will see. So we'll see what happens. Morning, Gregors, Rajiv. Afternoon, even Mumo. Let the chaos begin. Yeah, afternoon, Joe. So yeah, we'll see what happens. But it's difficult to tell with non-farm payroll. It's always a bit of a mess. We've got 4 minutes to go. So there's quite a few ADRs. Aussie dollar CAD is hit to the upside. If you look at the Australian pairs, bit of a spike up this morning on the Aussie pairs. So that's that one. Aussie dollar CAD, Aussie dollar US, also a hit to the upside. There you go. So potential mean reversion opportunities on those. That's just tapped straight into the highs, look. I've already got a short on that. Where's my second entry on that then? Miles away, look. Oof. Crikey, yeah, miles away. Not going to take a second on that. CAD Swiss also is an ADR hit today, so that's just hit down. So all these Swiss franc ones you can see on the dashboard, these are all to do with that weird spike. So we had this big Swiss franc order came in. So all the Swiss franc pairs pretty much have all hit ADR to the downside. But as you can see from the support rectangle there for the reversal alerts indicator, that was just one solid 15 minutes of selling price action, and then it's just stopped. So I'm not quite sure what's caused that. I don't think it's to do with European figures, but I can't see anything else. So anyway, just a big order that's come in. So all the Swissies have hit. Euro Swiss is a hit to the downside, but it's all bounced off again. You can't do anything with it, really. I mean, either you got in as soon as that candle closed, which you wouldn't, because there's no bullish price action, or you got in on the bull candle and it's just kind of sitting there. So none of these are really tradable today. All the yen pairs as well are ADRs. Very, very strong move coming through on the yen today. Obviously, we had a very, very weak move on the yen yesterday, so I got into the Swiss yen short. Sod's law, Swiss yen's the one that hasn't moved much. But all the other yens basically are starting to retrace yesterday's movement, as you can see. So it's all starting to kick in with the yen. But everything else, it's all yen, it's all Swiss today. So very difficult to get into any of these. All the yen pairs, though, you've got a reversal alert just about to go in there on the hourly. I'm already short on that one anyway. But yeah, you had reversal alerts on all these yens on all time frames this morning. So there you go, straight into ADR, straight out. Very nice. You just hit ADR to the downside. So that's a downside hit. So yeah, pretty good. Good opportunities. Actually, sorry, that's a downside hit that's just about to trigger to go long. Right, let's have a quick look at the euro US dollar. We'll watch the mayhem. Oh, look at that spread. Boing. Just about to go 4 seconds. Strong US. Okay, bull move. That's good. Nice. So, do I want to trigger long on the FTSE on a whipsaw news? Do I? I'm already on the DAX long. I don't want to get too greedy. Worried about that just triggering. I'm going to take that off. I might regret this, but I'm taking that one off because I am already long. Basically, this is an index move. So all indices are going to do the same thing off of the back of non-farm payroll. So there's no point in doubling my exposure when I've already got a long position on and it's protected. What I'm worried about is a spike and then that spike instantly retracing. Yeah, which means it's basically I'm just going to take a $600 loss for no reason whatsoever. So I'm not going to trade that FTSE. Obviously, it could go, but I'd rather just stay long on the one at the moment because I've got the DAX on. Let me just see where ADR is on that. I haven't got the ADR indicator on. ADR was 2360, wasn't it? Okay. So I'm 22. Jeez. You know, you're getting old when you can't actually read. I'm kind of at the point now where I need to make the numbers bigger. I've got some more glasses on order, which you're going to love. But I've got some glasses on order because I'm finding it getting a little bit like, you know, like in a menu. When you've got a menu in a pub, you can't quite read it. You have to move it. You probably won't know if you're not old. Anyway, so yeah, 23... about 23 is there. So I'm just shy of 23 as my partial. So what I'm expecting is a bounce off the 23 round number. Let's just see if we're continuing that bear move. Pound odd, 125 ADR. Yeah, see, it's retracing. So actual numbers, unemployment rate stays the same. So no change, which is kind of what we're expecting anyway. So it's come out as forecast. So I wouldn't expect a big move off the back of this. Non-farm numbers were up, which is fine. Hourly earnings are down. But yeah, unemployment rate is at 4.2. So there is no change on the unemployment rate. I get the feeling this might retrace. I'm just going to take a partial on it at the close of this candle. You watch all my profit disappear now. So I'm taking 75% of the position off, and I'll leave a quarter running, just in case we get a pop at the open on the New York session. Run out of steam, and I'm kind of tempted to take this off. I'll give it this candle and see what happens. But I'm chasing a loss of 1,800 from yesterday, so I don't want it to draw down too much because I've got the loss to recover from this morning as well now. Let's see where we go. Afternoon, Marco. Afternoon, Ryan. Currently watching sunbathing in the UK. Very nice. It is nice out there. I can't open my blind because it would be like somebody's shining a laser beam in here. I've got a south-facing office, so I have to have the blind shut. Otherwise, I just start dripping. It gets so hot in here. Got computers on, multiple monitors, lights. It's just like working in a TV studio. Not that I've ever worked in a TV studio, so I have no idea what it's like, but I assume it's quite warm. Afternoon, Mark. Right, stalling out here. So I'm just going to take a partial on this. There we go. So partial profit take. That's banked. I'm up for the day now. And I've got a runner. So locked in another 140 on it. So minimum I can do today is like $400. And obviously if it continues up to the round number, happy days. In fact, what I might do is just move that TP down. It's really close, isn't it, the round number? No, I'm not. I'm just going to let it pop. Let it go, as they say in Frozen. Right. Okay, so that's trailing. That's locked in. That's good. So that's the morning's loss recovered and back into profit. Probably a good call on the FTSE. Didn't manage to get the order triggered. And there is absolutely no movement on it. So let's quickly look at the US indices and how they got affected. So we've got a bit of a spike up on the NASDAQ. They'll probably all do exactly the same. S&P gap up. Dow gap up. So if you're getting a gap on something like that, it just shows that there is no volume in there today. So the orders, basically, there were no orders there. They just all got absorbed. That was the next place to trade at. So there's no volume in the market at the moment. I don't think there will be this afternoon, but we'll see. So not really a massive movement at all there. Bit of a letdown, that one. So it is a strong move US. So it is bullish. But as you can see, not very at all. Yeah, we've moved 30 pips on Euro US, so it's very, very little movement. Bit of a spike up on oil. Gold will have spiked down. Pound US dollar will come down. Nothing particularly to write home about there, is there? So as your ADRs, there's quite a few weeklies. Obviously, we are now in the closing point of the week. We've got half the day left. So most of these are not worth looking at, really. Pound odd. This has been coming down for the last 3 days solid. So that's your high of the week there. Wow, look at this pound. Who's upset the pound? Oh, this is Australian dollar by the looks of things. Yeah, big spike going on the Australian dollar at the moment. Really big spike on the Aussie. I guess it's just commodities rallying. Yeah, oil's rallying. So commodities are rallying off the back of that non-farm for some reason. But yeah, big spike. There you go. Pound New Zealand as well. So it looks like New Zealand dollar. So all the commodity pairs are rallying basically. New Zealand and Australian dollar all rallying off the back of the non-farm. And New Zealand down. So you got potential ADR reversals going in here. So what I was going to say was it's the end of the week. That's been rallying quite hard all week. We've just had, obviously, a strong rally coming in at the end of the week as well. So you've got 150% of the average weekly range now just gone in since Monday. Really big, strong push. And we've broken out that range. So there was a false breakout to the upside this week. Now we've got a false breakout potentially to the downside. So if this actually pushes back within last week's low, what you're actually seeing here is a weekly outside bar formation, which is indecision. So it will potentially come back into this range. So that's not actually a bad looking opportunity for a long here, but you're going to need some price action to show you that there is actually some buyers in the market. So dropping down onto low time frames, wait for those reversals to come in. Need some bullish price action before you get involved in it, but potentially these are all potential for reversals today. RSIs, we looked at a few of these this morning in the in the morning stream. The main things which were extended, I'm already in on. Swiss yen was a nice extension on the 4 hour. Yeah, so beautiful rejection to the upside, straight into the 2 week high. Rejected straight out of that look. So I'm short on that one. That's a 4 hour RSI extension. Reversal alert went in on that yesterday. Actually, sorry, no, it didn't. I did cover this one in the live room this morning. I got in anyway because the reversal alert was actually all the way down here, and I didn't want to get in late at night. So I took a reversal on it as we saw like 3 5-minute candles of bearish price action coming in, which to me is pretty bearish anyway. So short on that one. We've also got a few others. Most of these are yens on the ADRs. RSIs. They're all RSI extensions to the upside. So good potential mean reversion opportunities on all of these. We've got propulsion gap targets and resistance at play here. So good opportunities there. You've got pound odd also now extended on the hourly time frame. So not that extended at the moment. We are just 70-30. So if this can get down to sort of 150, 175 ADR, that would be a really nice, at least mean reversion on the day's price action back into that propulsion gap, which is the break of that low. So coming back up into there maybe on Monday. But I would wait and see what the hell's going on with this Australian dollar. I'm not quite sure why they're buying it so hard at the moment. Interest rate futures down again. I don't know what they're going to do in America with interest rates. Should be fun. Right, let's just see how that DAX is getting on. Okay, so FTSE would have triggered long. So I would be long FTSE now. I think the stop loss on that was here. So we'll see where that goes, but that might have been a decent long today, but we'll see. So trading stock kicking in on the DAX, locked into 50 now. So guaranteed $500 pretty much on the day. I have released the new version of ORB for those that want it. So what I've decided to do is I've done a video on the website now for ORB 3.1. So that's this video here. It's an hour long. And I have put chapters into it. So you can see all the logic explained, the strategy explained, all the settings explained, the loss recovery system, etc. explained. So you can go through that in chapters, but it's an hour long. I've updated the website as well. So all the inputs are in there now for version 3.1. But what I've decided to do is include on the download, if get the download, which will be the new version, I've included version 3.02 in there as well. Yeah, so if you download that, both versions are there. So it's up to you if you want to upgrade to version 3.1 or whether you want to stay on the old version 3. You can use whichever. So you can try them out. But obviously the main differences are the way that the settings works here. Obviously with 1, 2, 3 and 6 bar ranges, and you being able to now select a time frame, it means that you can trade this for pre-market breakouts, post-market breakouts, 1 minute breakouts, 30-minute, 15, whatever you want to do. You can trade absolutely any time frame with it now. So it's basically, that's the main upgrade from version 3.02 to 3.1. You've now got the ability to fine-tune it to whatever you want to do. So quite a few people contacted me saying, I want to trade 1 minute breakouts. So, because a lot of people in futures do that. So, so they also trade 3 minute charts and stuff. I don't know. But anyway, so you can do that now. So if you want to trade the 15 minute, and again, some people got in touch with me. There's quite a few, obviously, Tom Hurgard followers, and Tom trades a 15-minute range, which is not the open. It's after the open, second 15 minutes, I think it is. So again, you can do that now. So if you wanted to do that, you can set that to 15 minutes and set the 1 bar range to 10:30. And at 10:30, it will trade the last 15 minutes range. Yep. So you can trade the second 15 minute. And again, he's also got another strategy. So many people love Tom. I love Tom, but you know, his strategies seems odd, just the way that he picks specific times. Anyway, but anyway, you can also trade. What did they say it was called? Someone will probably correct me, but rule of 4. So he has this thing where you trade 4 candles after a news event or something. Again, this can all now be set up in the ORBEA. If you want to do specific specialized trades like that, you just need to select the time frame and whether you want to trade a 1, 2 or a 3 bar range, or a 6. That's more for the 5 minute time frame. But you can do all of that now. So it's completely configurable. And the other main difference obviously is the loss recovery system. And also now you have a maximum money risk in there as well. So the maximum money risk is equivalent to what the old lot maximum was, and the loss recovery system is different. Yeah. So that's the only real differences in this version. So it's just basically been made more flexible, really. But that's out now on the website. So if you want to go and just download a demo of it, go ahead. If you want a trial of it, fine. Or just if you've got it already, all your licenses will all work because it's the same thing. So you can just download the new version. What else have I got coming up in here? Nothing exciting. Right, there we go. Anybody got any other pairs they want to look at specifically today? Wow, this Australian dollar is really going for it, isn't it? See if there's anything I can bank today. Could have banked the euro pound. Slightly worrying bounce. I'm waiting for this euro pound to come up and retest this propulsion gap, basically. So I've got 2 longs on it. Looking for that move. And obviously backup will be down there if I need a third. But not really getting anywhere with that at the minute. It is in profit. Not enough to bank. The main issue I've got at the moment now is Aussie New Zealand. It's still rallying. So had an opportunity to get a third short on this today. Not quite. If this gets up above ADR today, I'll be taking a third on it. But somewhere up here would be nice to take a third, which will get the average up. But this is just grinding at the moment. Very difficult to get out of. So I've got a new rule as well, which I forgot to talk about when I was looking at when someone was asking me about setting up position trader again and how I'm using it. So what I've decided to do is, the way I've always worked is using average and trying to get an ADR roughly of movement beyond average to get out with most trades. What I've decided to do more of this year is take profit on trades more and do more drawdown control as I go. So, for example, if this pushes up above here and I'm going to get a 0.32 lot on where I started at a 0.26, if that comes back down into a decent move of like an ADR or something, I'm going to close that out and instantly do drawdown control on that position to try and get on top of drawdown faster at the moment, because we're seeing the two things that we're seeing a lot of at the moment are grindy moves like this and sporadic moves which just kind of flag and then fly off on news again. So we're seeing like news-based moves with Trump and then just nothing. Yeah. So those types of trades, when you do get one of the trades within a position into profit, I think at the moment it's more important to bank and to control risk than it is to wait and assume that the market is going to go back to normal price action. Because although it is, as you can see, doing 50% retracements, the speed and the velocity of them is not normal, is it? So again, here, look, big, strong 50% retracement back into propulsion. So it is kind of doing what it normally does, but it's not as reliable price action, I don't think, at the moment, because anything can set it off at any time now. We've got this Iran thing now starting as well, with Trump threatening everybody in the world if they have any dealings with Iran. You know, we're just in such a volatile position. I think it's key at the moment to just take money when money is presented, no matter how small it is, really, and not really rely on anything being typical price action that we're used to. It will revert. Everything will revert at some point. It always does. But I just want to be a bit more cautious at the moment. So when I'm starting to get to sort of 3 or 4 positions on, that's when I'm going to start looking at, right, if it does pull back a third, get it, take it, and start doing drawdown control straight away. It will mean less profit, but it also mean less drawdown. I'm reducing the number of pairs that I'm trading anyway. I'm keeping risk down to 6 to 8 trades maximum, 6 to 8 positions, just to keep on top of the drawdown, really, and keep diversified. So, but that's a prime example there on that euro pound. So, you know, we've got profit. Actually, they're both in profit anyway, so that's not really a good example, is it? But Aussie New Zealand, you know, if that one, if I do manage to get a third on it today, obviously the average is going to come up into here somewhere. I'll be up there. So if we can get a pullback of an ADR on it, it's worth taking that off at an ADR, basically, is what I'm saying. Because you can, in effect, then remove that one as well and take a very small profit. But what happens is then if it continues down, this is your only winner. Whereas when you've got 3 positions on and we get down to here, we bank 1.5%, 2%, don't we? So not being restrictive, I think, is the key at the minute. Thanks for the video. Friday night sorted. Yeah, it shouldn't take that long. It's only an hour. But anyway, so we have got the break on the FTSE. Should have left that on. Hindsight, a wonderful thing, isn't it? What's your opinion on Elliott wave? I'm deliberating whether to learn it. Don't bother. Do I have a gap up in the US 30? Yeah. So Elliott wave, and I've got a gap up in the S&P and the NAS. No, the NAS is fine. So I got really itchy nose. S&P and Dow both gapped up. I had a conversation with my mentor at one point, and he had taught me the shadow trading strategy that I was using, price action, support, resistance, all that sort of stuff. And I said to him exactly what you've just said, Ryan. I'm going to go and look into Elliott wave because I think there's something in it because it's mathematical. And he said exactly what I'm going to say to you now. Don't bother. It's the same as everything else. Yeah. So if you go and the trouble is, to prove my point, you're going to have to go and learn it. And then you'll go, oh, I see what he means. But what Elliott wave is market structure patterns. So Elliott wave is A, B, C patterns, Ds and E's and stuff. Yeah. Butterflies, harmonics, all that sort of thing. But what it is a move up followed by a move down, followed by a move up, which you could also use Fibonacci for. It's exactly the same thing. So that's an ABC pattern. So what you do is you buy there and you go, it's going to go up there. It's going to break that high. Oh, you mean a Fibonacci extension? Yes, Mr. Elliott. Oh, okay. So what you've done is taken Fibonacci, put your name on it, and put a few variations in that Fibonacci didn't have. Yeah. Oh, okay. Market structure. Market moves up, pulls back, pushes again. All it is, and this is the frustrating thing about it, it's mathematical equations based on market structure. So what you will find is that A has to have moved to B and B has to have pulled back a set distance, which is a mathematical equation of what we've had. But it has to be exact. So what you will do is you will find these equations and you will go, it didn't quite get there, but it worked. Oh, it overshot it, but it worked. Oh, it got there and then it flicked around a bit and then it worked. But that's not Elliott wave. But it's pretty similar to Elliott wave, and you'll find yourself just getting into the same confusion you do with everything else. It will either work or it won't. But if you put a precise mathematical target on it, and it's a little bit like with a fib, right? So if you say, right, I'm going to do a fib there, and price is pushed up on my fib, and what I'm going to do is I'm going to take an entry at the 50% retracement. If it comes back down to 49.6 and then goes like that, you're going to miss it because the rule is 50. Elliott wave has those same rules. A, B, C. There's a mathematical equation of the angles of A and B and all this sort of stuff. At the end of the day, the market is not accurate like this. So I can draw an ABC pattern on here very easily. Can't on this, but this is an ABC. A, B, C. Right? But it's not. It's A, B, B plus, B plus 2, B plus 3, and off, C. Yeah? That's not in the book. It's the same thing. It's market structure. Just too accurate. So I did exactly the same. I went off an Elliott wave and I came back 3 months later, something like that. And I said, you're right. Doesn't make any difference. All it's taught me is that the market moves up and down in waves, which is what you taught me previously. So but I would say if you learn it and you find it useful, it's useful. If there's something you pick up out of learning something like Elliott wave that makes a light bulb go off because, oh, I see what that is, but I prefer Fibonacci because it's pretty much the same thing and you'll suddenly become much more of a Fibonacci trader. Yeah, so you'll be looking for those 61.8 retracements. You'll take those, but you'll be like in the back of your head, you'll be going, "This is a C pattern." You've got harmonics like the butterfly, and the crab, and there's so much complication about it. I have built EAs to test all of this, and it all works sometimes and other times it doesn't. It's like all strategies. What it does give you is a very strict money management rule. So you will get in and you will have stops at specific points and it's very accurate and specific. The problem is you're trying to apply accurate, specific measurements to random price action that is chaotic. So you're trying to order chaos. Doesn't work. It's like head and shoulders. I can show you a million head and shoulders patterns that have failed. You won't see them, but you will show me head and shoulders patterns that work perfectly because they are obvious, but you'll miss all of the head and shoulders patterns that didn't work out. If that had gone down, you'd go head and shoulders, but it didn't. It went up. So now you go market structure. It's the same thing. 50-50, up or down. Yeah. That's a failed head and shoulders pattern. You can't see it because it doesn't look like a head and shoulders. An ABC pattern that's obvious on a chart, you'll see it. But an ABC pattern like that, you won't see it because it's not technically the rules, but it's still the same market structure. Higher highs, higher lows, higher highs, higher lows. Where it goes after the higher high is somewhere in here. Best thing you can do when it's made that higher high is look for the propulsion move that caused the break and add at the break. A, B, C. A, B, C. And then you've got X, A, B, C, D. And a million other variations of it. I don't know. It's an over. When I finished doing it, I went, that's an overcomplicated way of saying that market moves in waves. And that's it. So, best thing to do is buy a book on it or download a book. Ta-da! There you go. There's a PDF. Go and read it all. Right? Yeah, God, look, right? Symmetrical triangle patterns based on Elliott wave. I've got an indicator that does symmetrical triangle patterns, but they are Elliott wave. It's a 1, 2, 3, 4, 5 pattern with a breakout. That's it. Or rather an A, B, there you go, here we go. This is a great example. Look. There's your ABC. After your ABC pattern is complete, you then move over to an X, A, B, C, D breakout, right? That could easily have done that. Then it'd be an invalid pattern. But what are the odds of it working when you get the A, the B, the C, or the A, the B, the C, the D, the E? The odds are still the same. You're either going to get an F down there or you're going to get an F up there. All it does is it gives you a place to place a stop loss that has a 50-50 chance of getting stopped out. That's it. Okay, that's a pretty good. I mean, that's go and read that. That will teach you everything you need to know. If you get confused, dump it because it's really complicated. You will literally go down a rabbit hole and you'll never come out. If you want my advice, use the thing that's built into your chart called a Fibonacci, right? And when price moves up, it'll either pull back 23, 38, 50, or 61.8%. Shallow pullback, medium pullback, deep pullback. A, B, C, or A, B, C pattern. It's the same thing. It's Fibonacci. That's much easier because it's really simple, isn't it? If I stick a fib on my chart, if I put it on the right way up, if I could possibly operate a computer today, yeah, if I stick a fib on my chart there, and I look at where that's going to pull back to, that's a really crap one. That's a really bad example. Let's pull this one up there. Oh, there you go. It's already done it. Look. So this move here, yeah, it's either going to pull back to 23.6, 50, 38, or 50 if it's shallow pullbacking. Which of those it's going to pull back to is going to be completely different every time. Really good for maths people, Elliott Wave, and I found it really interesting, but I also couldn't find a way to make money out of it. Indices are off. DAX is popping. Gonna wish I'd taken that FTSE, aren't I? Yeah. Just going to lock a little bit more in at the base of that propulsion gap. What do we do this afternoon? I think we might struggle this afternoon with a breakout on this. It's either going to retrace it and do these gaps or it's not. Got half an hour to decide. Now, this is really interesting that the market is pumping really hard before the US Open. Yeah, so you want to be careful at the US Open today. The market's already done. Let's look at the over here because we can see it better. So that candle there is around a quarter of an ADR, just over, about a third of an ADR. So the thing you need to think about is what is normal price action at the open and in the US session. We've done most of it already. So when we get these spikes before the market opens, there's one of two things tends to happen. You either get a retracement of it, or you just sit around and it grinds up and down and doesn't really do anything because the volume today has already been entered. So this is obviously the Globex session. The banks and institutions are shut. So this is Globex trading. It's kind of already put the volume of orders in that it needs to do. So quite often you just don't get much of an open, but sometimes you get a very violent open. And it tends to be a retracement, but it could retrace. We've got 30 minutes, 25 minutes before the open. You know, you could see that happen before the open, and we're basically back, which is just obviously a whipsaw for an hour. And then the market will sit here. Whether it goes or not, difficult to call. But we'll see. All the shorts getting destroyed. Yep. Seems like turning something simple into something difficult for no reason. It is a little bit, but it's all about structure. So the thing that people struggle with in trading is finding a system or strategy that suits them. Everybody's looking for a system or a strategy that's profitable. That obviously we get. That's the point. But it's actually finding a time frame that suits you and finding a system or strategy that makes sense to you, which is why I say go and read the books, go and learn the strategy. If it makes sense, it'll be very clear. If it doesn't make sense, run away. Simple as that. If you read it all and you go, well, this looks like an overcomplicated way of using Fibonacci retracements, use Fibonacci retracements if you want to. I don't use any of this stuff anymore because I see it all anyway. After a while, you will see it. You know, I often call out fib retracements on here and say it's retraced 61.8 of fib. And everyone's like, well, how do you know it's retraced 51.8? So I just see it. It's not hard to work out roughly that is somewhere around 61.8. You'll see it. And you're in the back of your mind, you'll have the old, that's an A, B. We should be going to a C next. Yeah. Or that's a 1, 2, 3 pattern or whatever you want to call it. It's all the same stuff, though. It's basically either pulling back for a new leg or it's retracing fully. Those are the two things. It will only ever start a move and then fail, or start a move and succeed. When it's rallying back to start the next leg, it will start from somewhere higher than this. And all of these fib and Elliott wave theories work on the theory of mathematical calculations and measured moves. You'll hear the term measured moves used a lot in Elliott wave and in Fibonacci, which is why we have a Fibonacci extension. Yeah, the 181 Fibonacci extension is there because if the Fibonacci plays out, I've turned it into a risk reward calculator on this. Look, but a 181 extension is your A, B, C. Yeah, your C will be the 181 extension. So it's an A, B, C. C will be 108. It will be 80% extended on this. So it's all about what Elliott did was he measured moves and retracements and then expansions after the initial move. Yeah. And he found that when X happens and Y happens, more often than not, Z happened. And this is the edge. It will fail regularly, but it will work more often than not. The problem is it's not exact because it will hit the calculation and exceed it. In your head, you're going, it's invalidated, or you're going, it's a roundabout. So you will either take the trade or you won't take the trade. But all it's given you is a structured system that allows you to apply risk to the market. You can do it with anything. You can do it with an RSI. You can do it with a CCI, a MACD, a propulsion gap, anything you want. You can do it with ADR. You can say that when ADR gets hit, when you get an ADR hit, I am going to take a long, assuming that we do not move more than 125 ADR today, which gives me an edge of 77%. So what I'll do is when we hit ADR, I will immediately press the buy button and I will place my stop loss over a quarter of an ADR away because I know there's a 77% chance that it's not going to get there. And I will see if we can get a move back. If that leg is going to be a pullback continuation, I will target a 50% move. What does that give you? 100% of ADR to the downside, a quarter of an ADR stop, and a half an ADR target, a 2-to-1 risk-reward ratio. I just invented a strategy. Doesn't matter how you get in. It's just using mathematics to give you an edge in the market. If you risk less than you make, you have an edge. That edge has to play out more than the risk-reward ratio. So if you get a 33% strike rate with a 2-to-1 risk-reward ratio, you will break even and make a little bit of money maybe. Yeah. If you get a 50% strike rate with a 2-to-1 risk-reward ratio, you're going to get a 75% growth in your account. Brilliant. It's all maths. Everything is maths. So what a lot of people did was they started applying mathematics to trading. And this is where you get quants. Yeah. Elliott was one of the groundbreakers in developing market structure. And then ICT came along, renamed everything, and went, I invented this. All the same stuff. You're just going to learn a different version of market moves up and down. And how do I apply risk to it? But if it clicks, it clicks. That's the thing. That's the important thing. If you learn it and it clicks, it's the right strategy for you. But you won't know it until you do it. That's the problem. We spend 10 years of our life doing everything, doing every course, reading every book, trying to figure out what actually makes sense to my brain, because it's going to be different to your brain. That's the hard bit about trading. Still pushing, trying to anyway. After the NFP push long before the open, I'm keeping an eye for a contrarian market open. You've got a 50-50 chance of being right. Would you say that the recovery EA can also be used on Forex pairs? The opening range breakout EA? I've never tried. You can. Afternoon, Pot DJ. You've retracted your message. I saw you. Yes, you can, but there's no open in Forex, is there? So if you look at the Forex market, there is not an open. I get asked this question quite a lot. I want to trade the opening range breakout on Forex. I want to trade the open on Forex. There isn't an open on Forex. People say it's 8 o'clock. Today it was 10:30. Yeah, it wasn't 8 o'clock, was it? That was there. Yeah. Didn't open, did it? It moved there, but that was news. Well, it wasn't news, actually. It was just a movement. But so you can't apply time to Forex because Forex runs 24/5. It just runs all the time. There is no opening range that you can break out of. You could apply it to FX. So things, European markets, I've done a session like this before in live rooms. So, if you pick, everybody says that it's 8 o'clock in the morning is when the market opens, right? So that's 10 a.m. on my broker. Okay, so that is there. So let's look at 10 the next day, the previous day, which is there. And the previous day, which is there. Okay, so that is the market open, according to people that think there's an open. So that price action there is the same as that price action there. So before the market opened and when the market was meant to open, and for a half an hour to an hour, actually, after the market opened, didn't do anything. Today, market opened, didn't do anything. It was trending down. Now, that was coincidentally around about the 10 o'clock mark. It moved, actually, it started moving with a nice 3-bar reversal about 40 minutes before. Yeah, so do you see what I mean? There's no way you can apply an open to this because it will move when the market's ready to move. The market's ready to move when there's an imbalance of orders. So when two banks are dumping loads of money in the market and they're just filling each other's orders, we're not going anywhere. When this bank stops and this bank keeps going, they're going to need to find some buyers. So they'll move the market to wherever the sellers are in the market or the buyers are in the market to take the opposite side of their order. That's what creates market movement. There isn't a time that starts. In the stock exchanges, the opening bell goes. You can't trade before the opening bell, apart from Globex. So large orders cannot be filled in Globex because there isn't the volume. So we have a volume spike where we can actually get our orders filled. That's why we have an open. So you can try and apply it to Forex, but 2:15, we just had some news come in. Looks of things. Something just popped then. US dollar just dropped. No, I meant the hedge EA. Oh, right. Okay, Marco. The hedge EA. Well, yeah, you can hedge the Forex markets, but again, the stock index, the name's in the clue. The stock index hedge EA is for trading stock index opens. It's not for trading Forex. Try it. But, the difficulty is, when are you going to set the times? What times are you going to start hedging at? It's the same problem. There is no open. So, guy called Brian used to come into the live rooms. He was trading with the SIHEA on Euro US dollar, I think it was. And he was trading the Asian range breakouts. So at a certain point in the day, he would basically, it's the old Asian range breakout strategy, which is obviously, depends what your thoughts are on it, but I think it's a load of rubbish. So there's your Asian range. So if you trade a breakout of the Asian range there, you got stopped out, and then you went short and you got stopped out. Asian range breakout didn't work that day. Asian range this day was, again, there. So you broke out long. Now you're back inside the range and you're popping out again. But depending on where your stop loss was, you either got stopped out or you didn't. But if your stop was all the way down there, good luck getting a 1-to-1 risk-reward ratio, because you've got to move more than an ADR. And the odds of that are 42%. So you've already on the back foot, aren't you? So first of all, you've got to find a range that's the right size, and then you can hedge that range. Fine. And then if it moves to 5R, you can retrace it. Fine. So it will work because it's a hedging recovery strategy. But what time do you take your hedges? When do you place the pending orders? What time of day? What does the range need to be size-wise? I mean, all that testing would need to be done. So yes, I'm sure it can be done, but the whole purpose of a momentum breakout strategy is you need to be able to know when the momentum is coming so that you can break out. With FX, there is no timing momentum. So it becomes difficult to do. I'm with 10 minutes away from the open. I'm really not sure what I want to do with US indices today. Risk is reset, so I think I'm going to trade it as normal. We got 10 minutes to go. It hasn't retraced any of this yet. So I have a feeling we might get a retracement at the open. So I'm going to look for them to come back to the propulsion move on the news. And obviously there's a gap on some of these. So I'm going to assume that we are going to short from the open, and I'm going to try it. Only because I'm up 800 on the day so far. So I'm just going to reduce the risk on this, and I don't mind stopping out on this DAX. Then the DAX is done. So the morning session is going to generate $800 odd. And we'll have a go at the New York session. We'll see where we go. ORB works quite good on pound yen at the same time as the German 30 opens. See, there's no logic in that. This is the thing, there doesn't seem to be a reason for that to move. I mean, that today was great. Look, so there's the open. So that is the open there. Exactly where that arrow is, funnily enough, retest. So yeah, I mean, today it was a beauty, wasn't it? But that's 6 a.m. That's when it broke yesterday. So 10 a.m. yesterday was here. Yeah. So this is the thing. Look, that was 10 a.m. yesterday, which is the European Open. You just got whipsawed. So you'd have broken short and stopped out, broken long. Potentially stopped out on that. You probably would have been stopped out on that. And then it broke. But you see, the move actually started around about 10 to 11. Then the volume picked up. Yeah. So there was no open. This is the thing. I don't see that day. The move started when the US session opened. There is the London Open there, that candle. So you had a break long, which failed. And you would have broken short and stopped out. So it's a 2x stop out. I don't know. Test it. Stick it in. Let's test it now. Come on, let's do it. Pound yen. Why not? 5 minute. Whoops. Every tick, that'll do. ORB 3-1. So we need to set it up at 10:05. 10, 10, 10:15, 10:30. That'll be fine. We'll go for, 20% of ADR, you're going to struggle, aren't you? So let's try 15% of ADR. And let's use, that's too tight as a trailer. Let's go with a 15. Let's go to break even only on it. Stop loss 15% of ADR, and we'll take half at 2R. Let's take 50% off at 2R. Let's try that. We'll see what happens. I've just updated all of my data. I just downloaded new tick data this morning. So it's just going to have to regenerate that tick data. Market's opening in 7 minutes. Just about to stop out on the DAX. That'll be 800 this morning. Marco, I'm new to your strategy and I struggle to do drawdown. I have seen an old video of a guy who created a system that initially traded like us by breaking up initial position. If he got caught out and the prices moved away too far, a hedge kicked in. So he used our strategy but added loss recovery. Yeah, I've done, Marco, I've done backtesting in the member streams. If you go in the member streams, we've got, because you are a member, I can see, we've got videos in there on hedging. I've never found a hedging strategy that works. I've built models and EAs to backtest hedging strategies, lots of different variations of hedging strategies. I can't find any that work. Theory is great. Market doesn't work to that theory often. So I'm happy to look at stuff, but I've never found one that works. The problem with hedging is you need to re-hedge hedges. And when you get out of a hedge, every time you exit a hedge in profit, you're always left with another one in the opposite direction, which means you've then got to re-hedge your hedge. And I have had hedging strategies working very, very well for a period of time, and then they get to a point where they just go wrong. So you get stuck in a hedge for 2 or 3 months at a time, and that's the problem. With hedging, you are basically stopping loss from being achieved, but you're also stopping profit. So if you get into multiple instruments and you hedge half of them, that half of your portfolio cannot generate alpha. You can't generate profit with it. You're better off taking a stop loss and trying again, because you just get stuck. So I just never found a way to make it work. I understand the logic. I've built the logic. There's people that have got amazing complex hedging strategies, and I've gone, that looks really good. I built it and I go, that's where it goes wrong. And this is the beauty of backtesting. You find the problems with strategies in the real world. So in theory, they can show you 1,000 versions of it working, and then they can show you 10 or 15 versions of when it can go wrong. But you can always find one where it goes very, very badly wrong. And that is always, I can't get out of that. And it's the Achilles heel of the strategy. And there's always an Achilles heel in every strategy. You just have to basically focus on that heel and fix it as much as you can, but it will never be fully fixable. Otherwise, you'd never have drawdown. That's the way it is. Okay, so there's a break short on the pound yen. We stopped out on a trailer, and then it went further. Trailing stops, which would have been a beautiful break. No range there. That's a 30-minute range. TP stopped out in the second half, and we've broken short and stopped out at break even. So that's pretty good. Clean break short, stopped out and recovered half of it. Nice clean break short there. And a TP. I'm not sure I want to show you any more of this. So that's a break even and a stop out. How big was that? 159. 157. Needed 294. That would have been a beauty, wouldn't it? That's a news event, though. Look, market's just opened. Okay, so stopped out in the DAX. Oh no, it hasn't. Sorry, oh, that was an alert. We've got 3 minutes. Stopped out short, partial profit take, and break even. So again, another profitable day. It's pretty good actually, isn't it, on pound yen? That wasn't. Oh, look at that. Just missed the partial. US dollar CAD ADR. We got some movement. US dollar's collapsing. What's he said? Canada's PM Carney and Trump are set to meet at the White House on Tuesday. That's collapse of the US dollar. Quite sure why, but or was that the Canadian dollar rallying? Let's have a look. No, this is Canadian dollar rallying. So I don't know. It's a little bit of a combination of everything at the moment. Trying to see if I can figure out what that move was. It's just the US dollar CAD. So you got an ADR hit there on the US dollar CAD to the downside. Anyway, let's get on with this test. Might have found a new holy grail. Don't tell anyone. Stop out. Stop out. There's a double stop out there. Haven't got the loss recovery system turned on this because that is set to a $100 max. Let me just redo that. It's not recovering any loss. Probably do better with loss recovery. See, this is the trouble. There's no reason for this to move, is there? Because there's no news event to drive it. There's no opening bell to drive volume in. This is the problem. I think you might find it gets a little bit stagnant after a while, but I mean, it doesn't look too bad, pound yen. The other problem you're going to have with it is spread. The pound yen spread is big. All yen pairs are quite big a lot of the time. I mean, it's still up, look. Up 791. We're only risking $100 a trade. There we go. We're up 1,000. So we're up 10%. After we'll be up 10% when this trade closes out. Okay. So we're up 11%. And that is from 1st of February to the 27th of February. So 10% a month on one instrument. Take that. Let's let it run and just see what it ends up at. DAX has gapped up as they were closed yesterday. Yep. How's the breakout strategy going? Slowly. Market's open. So the breakout strategy was working very well, and it still is okay. But I found a few problems with it in live testing where it's not quite doing what it should be doing. I think the thing with that strategy is it needs to be back tested on individual instruments. ADR is great for measuring breakouts on indices because we have a range of movement every day. And what we're trying to do is assume that that range of movement will continue. And at a specific time of day, we are measuring that range and taking a break on that range, which gives us a positive risk return. With the breakout strategy, that was running all day long using ADR. The problem I found with it is that on tight days, using ADR wouldn't trigger any trades. On volatile days, which were range bound, ADR would trigger constantly because the candle sizes would be, market froze then, the candle sizes would be triggering constant trades. So what I've done is I've adjusted it to work on ATR rather than ADR and monitor what the average true range is over a period of candlesticks today. So what I'm looking for is a breakout to start to happen, but using today's range rather than an ADR, which is obviously the 10 days prior range or the 3 days or the 5 or whatever you want. So the strategy's sound and it works very well most of the time. But when the market goes into contraction like it has, it triggers too many trades too often. It overtrades. So I needed a filter basically to stop that happening. And the best way to filter it is using ATR. So I've recoded it and it is running on demo at the moment. And it seems to be much more stable because it's not taking as many trades. It's still working. It's still in development, but this kind of last 2 weeks with Trump's tariffs have kind of shown the problem with it. When you get a big ADR day, it will just trade and trade and trade and trade and trade. And what it was doing was making really good money constantly. And then it would have these huge loss days where it just went long, short, long, short, long, short, and it just stopped out continuously. But it was because of the volatility increase. So it needs a volatility filter on it. And the best way to filter current volatility is ATR, not ADR. So we look at the average true range so far for the last 2 hours. If we start to exceed that, we pick up, then we'll get into trades. So it's working on that respect at the moment, which is pretty good. But I need to backtest it properly on, because it's FX, it needs to be backtested on all the instruments really to see whether it works on the yens, the Swissies, and everything else. So it's still in development, but it's a long process developing. This is why people write books about it, because it takes a long time. It's a lot of effort, but it's still there. So I'm going to do more work on it. 1 bar range is in, which is your 5-minute range for me, and there's no trades. So we're too tight today. As long as we break the high or the low, we will get a trade on the 10-minute range. Let's have a look at the NASDAQ. Same with the NASDAQ. NASDAQ's only done 50%. So going to need a bit more movement on the NASDAQ to get a trade in. But if this paints an inside bar and we get a couple of inside bars here, we're going to struggle, I think, today. Market's already done its movement, hasn't it? So we'll see. So up 800 on the day so far. We'll come back to that in a second. Let's just see what the end of that test was. Not bad. So we made 16% in 3 months. So on the pound yen, that's making 5% a month. Obviously, you need to test it on other instruments. Let me run a longer test. Let's go up to yesterday. I'll turn visual mode off. See what the equity curve's like on it. See if you, Marco, see if you can find that video and send it over, and I'll have a look at it. Hedging's always fascinated me because I'm a statistical theory-based guy, and everything I do is based on testing, robustness testing, mathematical equations, etc., etc. So hedging has always interested me because it is the maths of movement. And this is a random moving instrument. So if you can figure out a maths equation that extracts a positive outcome, that is a strategy. That is an edge. I have just thrashed through pretty much all the hedging strategies I could find. Not all of them, but I mean, a lot of them. And I got to the point where I just gave up, because in theory and in practice and in testing, I just found at some point you get stuck and you can't get out of it. And the problem with hedging is when the hedge widens. So if you hedge and then you exit, every time you exit a hedge, you have to exit below the lower half or the upper half of the hedge, which means that you then re-hedge. And the hedge gets wider and wider and wider and wider and wider. And before you know it, you were originally hedged with that, and now you're hedged with that. So the only way out of that is to work the hedge from the inside. So when it moves up, you then take that one off and then wait for it to move down and move up again, and you re-hedge. So you reduce the size of the hedge. So you try and work the hedge from the inside to reduce the size of it. The problem with it is, if it goes into a nice little trend in either direction while you're working the inside of the hedge, it expands your hedge out again. You get wider. And I found a little bit like this P&L, New Zealand US has just hit ADR. We've got a lot of movement on the US. Aussie US just hit. You end up going from somewhere like there to there where you can't generate any profit, because all you're doing is trying to exit the hedge by closing profit out and then reducing drawdown on the other side of the hedge. And you just end up stuck for months, which is fine. Eventually, you usually get out of it. But what do I pay the mortgage with while that's happening? You know, it's not a sustainable money-making strategy. It's a good loss limiting strategy, but you need to generate regular profit. And yes, you can run this on multiple instruments, and the theory would be that while some of the instruments are stuck, the other instruments will be just working and generating money. That's fine if that's the case. But there's a lot of work involved in hedging as well. It's complicated, and I don't like complicated. I like simple, because complication very rarely works. 125 ADR on the CAD. So you have generated alpha there, but it fell off the end. It's not great, is it, on Forex? Aussie US, big move. We've got some big moves coming on. Let's have a quick look at what's going on. We've got ADR hits all over the place. US dollar coming down really hard. Big sell-off on the US. Euro US will be popping. ADR hit to the upside, Euro US. Pound US will be popping, which I've got a long on. So quite a bit of movement going on ADRs. Aussie dollar US, 150 ADR. So I'm about to take a second short on Aussie US in a minute. No range on the NASDAQ. We got a 10-minute range on the S&P 500. No range on the Dow. That's not far off, but if we get an inside bar here, there won't be a trade on the Dow. Same with the NASDAQ. If we get an inside bar now, we won't get a trade. If we break long, we will. I hear you. One loses buying power. Yeah, it ties up capital. That's the problem. You're a risk manager, and your job is to use your capital to generate alpha profit. If your capital is restricted by 50% because you have some of it locked in a hedge, your risk that you can take is reduced. So it limits your ability to make money. This is the problem with it. And this is it's great in theory. There's lots of gambling theories out there which are great on paper. But when you try and execute them, like martingale is a perfect example. Martingale is an amazing gambling strategy. I was talking about this morning in this morning's live room because somebody asked, how do you turn $500 into $2,000 quickly? And I said, go to a casino. Use martingale on blackjack or roulette and you will do that. I've done it many times. I always end up walking out at some point with no money though. Yeah. So I'll walk into a casino, I'll have a good night, I'll walk out 400 up, and then I'll come back to the casino the next week and I'll give them 200 back. And then the next week I'll give them the other 200 back. Then I'll walk out 300 up and I'll come back to the casino and give them 150 back the week after. It's a zero-sum game because martingale eventually will get to a point where you run out of ability to place another trade or place another chip on the table. It's great until it's not. And hedging, I found, is very similar to that because you're basically saying, I'm not going to take a loss. You have to take a loss. Yeah. Same with position trading. You can't hold a position forever. You have to cut it at some point. Yeah. And it's that decision-making process which makes it profitable or non-profitable at the end of the day. So it just doesn't quite work. But I'm not saying that there isn't people out there that are making money out of it. And if someone's got a strategy, they've been trading for a few years with it, and there is a mathematical edge to it, then I'm up for modeling it, definitely, because it's really comfortable way to trade as well, because you don't care. And this is the beauty. This is why I love position trading. I don't care which way it goes. And this is partly why I love ORB. I don't care if it doesn't go long. It will go short next. So I don't care. If a position goes against me, I don't care. I change my price. If you get hedged, I don't care. I'll wait and see what price does. When price shows me which way it's going, I'll take off the short and then I'll wait for it to come back, and then I'll take off the long. And the difference between the short and the long, as long as it's bigger than the hedge, is profit. The mathematics are really simple. But the practicalities of executing it are laser targeted. And if you miss it, you are in trouble. You have to recalculate, reassess, and it becomes this huge ball ache, basically, where you just go, I can't work out what to do, which is why you need automation. And when I employed automation, it just showed me that there was a load of problems with it. So I got stuck, and that's where I gave up. But I did it in the live room. If you look, go and look in the members area. Why can't you search there? I'm gonna have to load up loads. There you go. Right. Hedge. There we go. Strategy development, creating and testing a hedging strategy and looking at the pros and cons. It's that video there. Go and have a watch of that. It might make you go, yeah, I can't be bothered anymore, but it might not. So go and have a watch of that one. But that is the video that I did in the members streams about it. Peter, I am trying to hedge. The idea is if I got out when the trade generates $9, then place another. If it goes in some distance, I use some profit to do drawdown control. So trying to keep the hedge in 18 to 30, then trying to trade another day the same. Yeah. The word in there that makes me worry is trying. Yeah. It's like I say, in theory, it works. But when you try and execute it, it doesn't quite, I don't know, it just always falls apart sometime. As long as you're demoing it, it's not a problem. Yeah. But you've got to give it quite a lot of time to find the problems, because the problems won't, if the market does this all day long, yeah, in a hedging strategy, you're stuck. You can't get out. And the problem is, if the market does this in a hedging strategy, you also can't get out. So the only way this works is if it moves in normal market structure, because you need to take profit here or reduce the hedge size by using negative movement. It doesn't work like this because you get hedged and you're stuck because you need a breakout to actually take profit to take drawdown off. And if it goes parabolic, you're stuck. The market spends 80% of its time doing this. And the rest of the time, it's either doing that or using normal market structure. So it's kind of a reverse mean reversion strategy. I don't know. I just got stuck with it. So Anyway, won't labour the point. But I'd love someone to find me a version that works, because I'd really like to model one that works and develop an EA for it, because it's the sort of thing you can just chuck on. And because it's all mathematical based, there's no discretion involved. If you can find a mathematical one, but often you need some kind of discretion. So if I was hedged on this, for example, and let's say I've got a hedge that is this big, yeah, I have to make a decision. So I've got a short on here and a long on here. That's the size of my hedge. I have to make a decision on this short because it's decided to go short. I have to decide where I take profit on the short. Yeah. And then as it pushes back, I need to make a decision on when I cut some of that drawdown. And let's say it pulls back to here after me taking profit there. That distance there and that distance there are not equal. So if I take some of this off, this long now here, I can't take all of it off because it generates a loss. So I could take 50% of it off. But then if it continues up, I can take all of it off later. But if it continues down again, I have to re-hedge by shorting. And what's happened is, as you can see, my hedge was there and now my hedge is there. So what I've done is I've made my position worse. And this is where the problem arises. The maths has to be spot on to reduce this, but then you have to decide where you get out of one of the shorts. And you have to decide what percentage of the opposite hedge do I remove? Half? 3/4? So how much money shall I make on the short I've just had that worked? There's too many decisions and too many variables, and you can put them all into a tester, which I've done, and spit out hundreds of results. But in the real world, it's very difficult to decide, because you would normally want to use some kind of signal to the downside, like the low of that propulsion gap, which is a weekly high, to take that short off. But what if it collapses through it and you've taken the short off? You've got to re-hedge it short again. What if when you re-hedge it short again, it pops? Your hedge is now that big. See what I mean? It's so complicated. But I don't know. Broken short on the S&P. No trades on the NASDAQ. No trades on the Dow. So single short on S&P at the moment. We will be taking a 30 though. So 30-minute range on the Dow is going to be wide enough. And I guess the NAS. NAS is inside bars. So unless we get 5, 10, 15, 20, 25, unless the 5-minute candle after this one breaks one of those highs or lows, there's no trades on the NAS today. S&P is almost exactly, it is pretty much exactly 15% range. You mentioned you just updated your tick data. Which data provider do you use? Tick data suite. The link on the website up here. There's a link on that page there. That integrates directly into your MT4 terminal. Ooh, big spike down there. I'll take that. Just going to move my partial up into the gap fill. Peter, we got SIH. You could be possible to make a kind of hybrid version. Yeah. So yeah, I mean, obviously SIH already has a hedging system built into it. If I was going to remodel another hedge, I think I've got about 3 or 4 different hedging EAs that I've built over the years. But obviously I can remodel those quite easily. The other thing you can do, Peter, as well, is use the portfolio, not that one. Use the portfolio dash. I need something with more than one trade on it. So if you're using the trade portfolio dashboard to manage, you can manage your hedges, because obviously you're going to have your lot size long and your lot size short displayed, and your total P&L, and obviously the P&L of every trade. So you can use this to go. So, for example, if that was a short at 55 and that was a long at 75, you could say, okay, I'm going to close that out, bank 55, 75, half of that is roughly 37. So I would close 50% of the long. Yeah. And now your job is to get ready for a re-hedge short. If it now continues to go long, that will reduce, and you'll see what your P&L is. And when that gets below your P&L, you can exit the hedge. Happy days. So you can use the trade portfolio dashboard as a visual instrument to identify, because this is what we're kind of doing with position trading, isn't it? Position trading is in effect a kind of hedge. We're just not using direction as our hedge. We're using different instruments. So right now, I'm sitting at 0.13 in profit. I've got a big problem, not a big problem. I've got a losing trade with Aussie New Zealand. Yeah. So what I could do is I could close that out. I could close that out. I could close that out, and I could close that out, and up for the day. And then I'm just left with these open. That cancels that out, and I've got a bit of loss there. I am hedged, but I'm hedged cross currency, and direction's got nothing to do with it. But it's still a version of hedging. We are basically placing trades in the market and seeing what the market does, because that's all you have. You don't know where it's going. So we'll see where the market goes, and I'll use the profit I have available to reduce my losses. Rather take 50% off that one. In fact, that's something I'm going to do right now. Look, because I want to bank something today. Euro pound. So we're popping up on the euro pound there. I've got 0.25% profit there, so I can close that euro pound out. Bank it. Yeah, so that one's done. I was up at the highs and we're up at ADR, so probably not a bad place. So I've got 128 in profit, so I'm going to close half of that off. I've got 72 in profit now, but I've reduced my drawdown dramatically on Aussie New Zealand. Yeah, that trade, obviously, because it's got the square around it, means that that trade is going to improve my average price. So if we go over to my Aussie New Zealand now, the average that was here is now here. So I've now given myself an exit at propulsion. Kind of hedge, isn't it? It's a similar process. Yeah, so we're going to get a trade on the NASDAQ as well. So the 6-bar range, 30-minute range is going to go in 4 minutes, which will be that. So we'll be taking a break of the 30-minute range, which is fine on the NASDAQ because it hasn't gone anywhere. S&P 500, we're obviously short. The Dow, not really sure I want to trade that as well today. Wait and see what happens. I know you will prove me wrong. That's the point though, Peter. I would rather prove you wrong and prove myself wrong than trade it. Yeah, this is what it's all about. Trading is testing and development of an edge. When you do something and it doesn't work, you know you can scrap it. Yeah. And if you continuously scrap stuff, you're not losing money. Yeah. When you get something that works, you trade it. So what you do is you just trade what you know has a competitive tested edge that's robust. So, this is why I spend so much time in the tester and in development. I'd rather spend 3 months on development with something that's got promise and throw it away, because you learn a lot more by throwing things away, because it teaches you what doesn't work. The next time you see a system or a strategy, you'll go, that looks like that one. It didn't work. Why didn't it work? Because of X, Y, Z. Does this do the same? Yeah, it won't work because of that. That's how you learn. It's the best way to learn. you do something like that pound yen experiment we just done this morning. Looked really good to start with. Test it over a longer period of time out of sample, which I did there. I tested 3 months in sample and 2 months out of sample. Looked good in sample. We made 11%. Out of sample, it lost more than 11%. Not got an edge. So don't use it. Simples. That's why I kind of, that is what I am kind of trying. Like, don't have it as a hedge, but position trading in each direction. Yeah, do DD control. Yeah, but this is why position trading I think is better than hedging, because you're not reliant on managing anything difficult. Position trading, you're literally looking at your P&L. Yeah, and you're like, where are my problems? And where is everything going well? If it's going well, leave it going well. If it's not going well, deal with it. Yeah, with hedging, what you actually have is everything going wrong. Because if you've got a hedge on, it means that the idea for the trade didn't work out. Because don't forget hedging as well. This is the other important thing about hedging. A hedge system is a trade idea gone wrong. With hedging systems, a percentage of those trade ideas are going to go right, and they will not get hedged. So you are actually going to generate profit with a hedging system on everything that works out for you. But everything that doesn't work out is an immediate nightmare most of the time. So it's a little bit like this. If it's green or if it's not in a massive amount of red, ignore it. But the trouble with hedging is if you've gone wrong once, everything becomes the problem, which makes your life every day really unhappy. Yeah, because it's like going into work and knowing you've got a bad day of work ahead because your boss has said, do this. Yeah. Every morning you open up your terminal and you go, 80% of my positions are hedged. I'm not going to have a fun day today, am I? I don't want to do that. It's just no fun, is it? It's a little bit like opening up your P&L every morning and going, I'm in 8% of drawdown. And then a news item hits and you go, I just made 12%. That doesn't happen in hedging because it doesn't matter which way it goes. You still don't make any money. Pound odd, H1 RSI. So the hourly charts are starting to signal. We've got Aussie dollar CAD also hit. Pound odd is 125. Lovely rejection on the pound odd look. Not 125, 25, sorry. So good rejection at 150 ADR. Good looking long. You've just had a reversal alert on the 5-minute time frame. But you are buying straight into propulsion. So could well just get smashed. But if not, should easily get up to there. Okay, so there's the Dow range today. That's too big. Don't like the look of that. I'm not really keen on any of this today, to be honest. Maximum downside I can see on these today is probably this. So if you look at the risk, probably a 1R in it. So it's not actually very enticing today. So that's the Globex low before we got the news. So I'd be watching this area here, downside target, and this area here. If it breaks long, we're obviously off into new territory, so it doesn't matter. Yeah, Nasdaq's the same. Look, it's the same thing. It's the same chart at the moment. All these indices are so correlated. Look, Nas is looking to go long, which means that the S&P is going long. Gonna be one of those days, I think. Another thing you need is a lot of capital for hedging. Yeah. Be interested to set live the MRA hedge like you've had back in the days? Yeah, you can do that. Market reversal alerts EA. You can use that for hedging. You can use the position trader EA for hedging. So position trader EA obviously has a hedge mode down here. So you can set it to multi-direction trading, hedging, and it will take trades in both directions. So you can test position trading, hedging strategies with a position trader EA. But the way the position trader EA will work is obviously it will take a trade. If the trade doesn't work out, it will hedge there. So it hedges opposites. Not rather than if a trade doesn't work out, you hedge so where your stop loss would be is where you would normally hedge. The way the position trader EA works is it will take a reversal and then it will hedge there. So you create the hedge on mean reversion rather than creating the hedge on breakout. It's just a reverse hedge system, which works very well because you've always got one trade which is in profit. Whereas with this system, you've still only got one trade in profit, but not until you've got one in drawdown. Whereas this can work the opposite way. So, but you can test that with a hedge. Go and get the position trader EA out and use the hedging mode in there and play around with it. I haven't used it as a hedging system at all. So this isn't really doing a lot today, is it? Oh, we're long on the NASDAQ. Okay, so broken long on the NAS. Potentially US dollar might be moving then. Yeah, back up on the dollar. Look, so right, leave that. Just pulling back on the NAS. So speaking of hedging, I am hedged. So I'm long NASDAQ, I'm short S&P. These two are a correlated pair. So one of these is going to work out and one of these isn't going to work out. So I'm going to stop out on one, which means that the one that goes on the break, I need to make sure I take whatever that loss was on the other one in profit. If they both manage to hit their stop losses, nothing I can do about it. But these are going to move the same now. Obviously, they're just moving in slightly different distances. Yeah, so we've got that and that happening. Divergence. So if the NAS breaks long, the S&P will go and retest those highs, which will stop the S&P trade out. So that needs to move the same distance as that stop out. Otherwise, I have to take a loss. If the S&P now puts in a lower high and lower low, the NASDAQ will stop out. How's the GJ test done? Not well. It looked promising, but it ended up losing. Well, it didn't lose. It made money. Yeah. So this is a 10K account. We ended up on 10,800-ish, 10,700. So it made 7% in 5 months, which is not bad, is it? But you need to run a longer test on it. Let me just stick a longer test on. Let's go back to 2024. A year and a half. We'll see how it goes. But I don't know. I just FX. This is a momentum breakout strategy. You have to have momentum. You can't time a momentum. We can't say to the pound yen, "Is it okay if you just pop at 8 o'clock in the morning?" It's going to go no, because I haven't got any orders. Whereas all the indices are going, "Yep, I got billions of orders sitting here ready to go when the bell rings." Forex doesn't have that. Hopefully this answers your question, this equity curve. Watch it go up to 15 grand now and prove me wrong. Would be nice. Watching the past screenshots on SIH, I'm often seeing that when propulsion gap is formed above or below the range, there is 50 to 100 points move. Yeah, because the market pushes back to propulsion. Yeah, that's one of the good things about SIH. Obviously, you can screenshot every open and analyze it manually, which is a good thing to do. So it's holding its own at the moment. So we've taken about 13% drawdown. We're back to break even. Now we're back up into positive, 5% profit, 11% profit. I'm cancelling the Dow off. I don't want to, because I'm hedged. The chances are one of those trades is going to work. I don't want it to be a long and the Dow get up to here, trigger a trade and then stop out. It's going to ruin the day. So I'm just going to take that off because they're very similar movement, all three of these at the moment. So I'm just going to trade the NASDAQ and the S&P. Obviously, one of those is going to win, one of them isn't. What is SIH? Stock Index Hedge. So it's a variation on the opening range breakout strategy. Here. So this is there's a video there which is an hour and 20 long, which explains the strategy. But basically, it's the same exact. It's not exactly the same. It's different, but it's similar to the opening range breakout strategy. Oh, hello, we're up 32%. It's similar to this strategy, but there is no stop losses involved. So what we do is we use a measurement of ADR to decide on a range, the same way as this does now. And if we break long and it fails, we break short. So we go short, we go long, and we hedge the distance. Then when price moves down or up by a certain distance, we exit the short. And this is typically around about ADR, about 5 hours of movement. And then we place a pending order to go long on bullish price action, which basically brings our average price down and gives us an exit on the pullback. So it's the idea behind the strategy is if you get a clean break, you make money. If you get a hedge, you wait for the market to decide on direction, you go with that direction, exit in the way that it's gone, and then place a pending order to go back the other way more aggressively to get out of the opposite trade that didn't work out. But because you've got 2 positions long and you only had 1 position short, those 2 positions long, when they work, you can get out of the hedge very quickly within 1 or 2 candles. So it removes the hedge, and all you do is you target a percentage of the movement. So it's a good strategy. It can be frustrating as well, because when the market's rangy, it hedges a lot. I've just set it rerunning here. So it's up today. We've had some nice breaks today, made 140 loss yesterday. You can see it's up $100. This is a tiny little account. It's hardly up anything at the moment because it's been rangy for weeks. So the trouble with this is, I haven't got any strategies that haven't got a problem. Yeah. If there was a strategy that didn't have a problem, I'd be a millionaire and I wouldn't be sitting here talking to you. Yeah. All strategies have an issue. The issue with the SIH, as you can see, we got a hedge on here. Look. The issue with SIH is days that do this, you just take a loss. So this is going to take a $47 loss. It's already up 230, so it doesn't matter. But it's going to take a $47 loss. The days where you get hedged and then it moves, most of those days you make a very nice profit. Yeah. The days that it clean breaks, you make a nice profit. So 2/3 of the time, it makes a profit. But the third that it doesn't, if it happens to be a whole week's worth of crappy price action, it gives back the profit that you made on the hedges, because hedge profit is smaller than straight out profit, because you've always got some loss involved in a hedge recovery. So it's a grindy type of strategy. The edge is long term. It's there. It works, but it's slow. Yeah, up 3%, 4% in a month. So it's never going to set the world on fire, but it will generate nice revenue long term. That Nasdaq's rejecting the high of the day, trying to, which is lucky because we didn't stop out on the S&P 500. So if that rejection works, it will drag down. That will drag the S&P down. I need one of these to get either to a stop loss and a take profit equal distance, or not. One or the other. At the minute, I'm hedged. It's because we've been talking about hedging. This is why this is happening. If we hadn't mentioned hedging today, I'd have just been done now, wouldn't I? Yeah, Nasdaq broke out. So it's trying. We've got 1.5 minutes left on this 5-minute candle. So see if we can break above the high of the day. That might spur some buyers in. It's struggling though, isn't it? Look. We've got no more news today, so it's either going to go or it's not. Peter, thank you very much for the £10. £10, not dollars. I like it. Thank you very much. Much appreciated. You can have a pint on me, and thank you for proving me wrong as usual. I haven't proved you wrong yet, though, have I? Thank you very much, Peter. Much appreciated. You can prove yourself wrong, but I don't know. Someone one day is going to present me with a strategy, and I'm going to test it and go, that works. Because there are people out there with them. Don't get me wrong. I know I've got them. It's just most of them I tend to find have got an issue somewhere. It looks like we're just about to stop out on the S&P, which means I really need that Nasdaq to rally. I shall have a pint, and it is pretty much just one pint now, Peter, isn't it, for £10? Most pints now are about £7 a pint. 5.50, £7 a pint. I used to go out with £10 for the whole night. Scary, isn't it? Oh, I didn't want to see that. Okay, so that's a 1.5 year test on the pound yen using the opening range breakout for indices, EA, which I've just literally made up the settings for. Trading 15% of the ADR at European Open, 8 a.m. Taking a 5, 10, 15, and 30, exactly the same as ORB. Range break, 1% risk, maximum of 3% risk. Loss recovery at 1.2. ADR stop loss of 15% of ADR, so the same as the minimum range stop loss. Trailing stop is the same as minimum range, but break even only. And at 2R, we take 50% of the trade off. And that has just generated 93% return with a 30% drawdown. So 3R. So return on drawdown is 3. Very acceptable. Anything above a 2, 2.5 return on drawdown is a good long-term edge. We'd have to robustness test that, but it works on the pound yen. There you go. Nice equity curve. I mean, it had and this is the thing that worries me. There's a stagnation period here for, I would say, 6 months, but you've probably got 2 to 3 months of drawdown, followed by 2 to 3 months of recovery. And then obviously it takes off. Big, strong drops there, where the market would have just gone range bound totally. Symmetrical triangle break to the upside there. Good market structure. Inverse Batman. So yeah, looks pretty good. So this is the pound yen M5 ORB V3.1. 18 months, 90% return. There we go. So yeah, I mean, it's got an edge on the pound yen, it seems. You know, this is the thing. It's all about finding something that moves. There is no open on it, but obviously around about the first half an hour, when obviously the banks and institutions are in and they're starting to develop positions, stuff is going to start to move. So it makes sense, obviously, in the European session when the FTSE and the DAX are opening, that the pound is going to move. So most of that movement you'll find will be caused by pound movement. So you'll probably find euro yen will also work, but be very heavily correlated. Something like the euro pound, potentially, you may find that that works. Any of the euro pairs. Yeah, I mean, it's worth a try. Backtest it. So, you know, get the ORB V3.1 and run your own back tests. But that's tick level. Obviously, that's 99.9% quality tick level. So 93% return on a 30% drawdown. But don't forget, there's a 30% drawdown there. Yeah. So if you've got 10 grand account, as long as you're happy to see 3 grand of that disappear, most people, when they see 3 grand of their account disappear, will run a mile. But this is what backtesting is all about. You know that 3% of your account is going to disappear. Accept it. Trade with it. Yeah, that's the edge of the strategy. It's going to return you 93% at some point. But run a bigger back test. Go back to 2022, 2021. Don't go back via past COVID, because that was COVID. We are not in COVID, pre-COVID times anymore. That's gone. This is what I was worried about. Okay, so this could ruin my day. So we've got upside rejection at the highs, stopped out on the FTSE, and now the NASDAQ is starting to fail. I'm also long now S&P, so I've got double exposure long. If this now breaks down for the day, that's my profit gone. So I really need this to break long now. Forget rotational whipsaw today. It's going to be trouble, isn't it? I just needed to confirm I should do some useful stuff. Yeah. Useful stuff. That's what we like. Well, they take £1.50 VAT. So you have like £8.50. Yeah. I know, it's ridiculous, isn't it? The amount of VAT we pay on alcohol. I know they're trying to stop us drinking it, but come on. You're taxing us an absolute fortune. Everything that we do, everybody goes on strike for. So we don't get half the services we pay for in the first place. And then the only pleasure we have in life, which is going out, you make that too expensive. We can't do that anymore. We're all depressed. Thank you, government. Reform got in today, didn't they? That's interesting. We're turning into reformers. So maybe small fish and chips or a red squash. Yeah. It'd have to be a small fish and chips as well. That's gone through the roof. The cost of fish, because you're not allowed to trawl as much now. The cost of fish has gone through the roof. Nuts. Everything's gone up. But like you just said, this will likely not pay the mortgage. Not the best of consistencies in the US dollar yen. Don't know what you're talking about then, but that will pay the mortgage. That test that I just did on the pound yen, that would pay the mortgage. No problem. 93% return. Stick 50 grand in there, you're making 50 grand a year. That's just one instrument. If you can get three of those, I'll be happy. You need to make sure there's no correlation though. So if you're going to backtest that strategy, don't pick something that's correlated with pound yen. Don't pick the euro yen because it's the same thing. So you need to pick some non-correlated pairs to test it with. You want to run 3 or 4 non-correlated pairs, ideally, to get the diversification. Given the NFP beat, I guess interest rate cuts are off the table in the short term. No, interest rate futures got slashed today. So, well, I don't know, but I mean, increased defense spending. I'm going to need it if you keep pissing everybody off, Trump. I don't know. Interest rates for the US. He's been threatening Powell to basically say you have to do it, and Powell's saying, sorry, mate, you've just buggered the economy. Inflation's going up. We can't drop interest rates because that will make inflation go up faster. So I can't see interest rates being dropped, which is bullish US, but it's certainly not bullish, is it? Energy Intel Deputy Bureau Chief Baker, consensus is building around maintaining the speed increment of 411,000 for June. Don't even know what that means. When you say it could ruin your day, why not close out? Because the edge is the edge. You could close out. That's your discretion, isn't it? What I'm seeing at the moment is bullish market structure. Yeah, we have made a lower high there, but that doesn't mean this isn't going to make a higher high. But here I can see bullish market structure. 50% retracement, new high. So a new higher low is going to go in here and then a higher high. Or this is part of the leg that's going to make a higher high. If that's the case, the trades are going to work. But if we're going to go into rotation because the market's exhausted, the trades are going to fail. It's always a 50-50 chance. So your discretionary choice is close it or keep it. That is the difference between making profit or making loss. If I see constant rejection up here, i.e. wick after wick, that tells me the market is not going anywhere. But I've got one wick at the moment, which is showing me that there's rejection. And then I've got one wick at the moment, which is showing me that there's rejection to the downside, which is bullish. So right now, the last 10 minutes of price action are telling me the market is going absolutely nowhere. So I haven't really got a decision to make at the minute because it's sideways. I can walk away with that, or I could walk away with 2 to 3K. This is the choice you have every day, isn't it? Yeah. Take it candle by candle. Did you see that Starmer stated after reform got in? Did you see what Starmer stated after reform got in? No. I haven't watched any news yet today. New high of the day on the Dow. S&P, sorry. Pound odd 175 weekly range. Pound New Zealand 125 ADR. Still going strong. These commodity pairs absolutely destroying everything else at the moment. That's coming down to a monthly low. Sorry, not a monthly low. That is a monthly high. No, it's not. It's a 2-month low, sorry. So we've reacted at this level multiple times, look. Broke through it, retested, broke through it, tested, broke through it, tested, broke through it, tested. Very, very, very strong price level that. We've reacted at it over and over and over again. So really good looking buy opportunity on the Pound New Zealand at monthly support. So again, we RSI extended on the hourly. RSI extended on the 4 hourly in a propulsion gap that broke that recent high, which has been retested. So Potentially, you're going to find buyers enter there. We're exhausted at the end of the day. So that could be a really good looking long opportunity on the 5 minute. You're going to need to take a quarter of an ADR before you get a signal though. So watch for a 3-bar reversal here. Watch for a pause and then a bullish push. Stop at the low. Off you go. He is listening, and taxing us is what is needed. Yeah. Makes you want to move, doesn't it, to a different country. I'm already taxed up to the eyeballs. I don't really need any more tax. I said in this morning's stream, I'm looking at moving house at the moment. The cost for me to move house is over 30 grand. Just to move house, right? That's the government wanting me to pay them 20 grand for the privilege of having a job, paying my taxes, and being able to afford a different house. They're going to charge me for the privilege of living. That's basically what the tax is, yeah, for moving house. Great, isn't it? They don't do anything, literally nothing. They are being paid over nearly 20 grand for doing nothing, literally nothing, but saying you can move house because you've done well. Thanks for that. Anyway, taxing more. So look at that. That is the monthly level. That is the wick. That is to the pip coming off there. So if you want to take a long on that, you've got price action there at support. Okay, so 3-bar reversal would be a pull, pause, rejection, and then the next candle, which is going to start in 30 minutes, will be a push. So if you're super confident, get in on this candle with a stop below the low. If you want confirmation, wait for a bull price action to close above that high. Off you go. If you want to be super cautious, you probably wait for it on a 15. But right now, that's a pretty good long, isn't it? Look at that. To the pip. Absolutely to the pip. Last thing, and I will stop spamming. Using price action toolkit on pairs, buy a cross of the moving average and adding a trailing stop loss, but also it is manual, so it takes ages. And I have time because I can scrap the hedge. Yeah. So buying a cross of a moving average. Right. So if you're buying a cross of a moving average, what you're doing is you're missing half the move. Price action toolkit is for price action. Right now, what I've just explained to you right now is the bears running out of steam, having no more buyers available, and therefore flipping and taking profit on their order, making them a buyer. A 3-bar reversal is a pull, a pause, rejection, and a push. When you cross the moving average, because price will push up, the moving average will smooth out, yeah, in about an hour's time, you've missed half the move. Moving averages lag price by whatever number you place on them. So if you were to use something like a 20 moving average, 20 period moving average, you are asking what was the average price 20 candles ago. That has got nothing to do with the price action that is going in right now, which is a bullish reversal. By the time you cross the 20, you've missed half an ADR of movement. Look, I'll stick a 20 on there. Look. Moving average. That's 20 EMA. Yeah, so that's your trend EMA. Yeah, by the time you get above that, it depends what it does now, doesn't it? But, I'm getting in, it depends what this candlestick does, but I'm getting in aggressively there or conservatively somewhere around here, maybe. We've got 2.5 minutes on the candle. You're getting in somewhere up here. The difference between that stop loss and that stop loss is the difference between you needing price to get there for a 1R and me needing price to get to where you get in as a 1R. I can get a 2R by the time you've only got half an R. And by the time you've got a 1R, I'm getting 4R because you've decided to wait and see if it moves above what it did 20 candles ago. 20 candles on a 5-minute chart, I'm going to have to do the maths here, is two hours. So you're saying I'd rather get in based on what it did 2 hours ago. In 2 hours' time, I'll have been out and gone down the pub because I'll have made 4R on my trade. Moving average crosses are the worst systems in the world because by the time you get the signal, the move has gone. You've missed it. You need to get in when the move is happening, which is what the reversal alert is. See, the reversal alert is a slow confirmation signal. Yeah. It's a bear power signal, which is, in this case, which is very similar to what a moving average cross is. So you're better off just using a reversal alert. But it doesn't matter which you use, does it? This is the problem. Moving average strategies, they're just a little bit slow to react. I just missed an exit. Waffling. Closing out the S&P. And I'm going to break even the NAS. Cancelling that sell stop off. If it's going to be this whippy, I'm not interested. So, yeah, I'm just going to take a break even on that if it doesn't work out. That might be the wrong thing to do. We have just made a new high, but that's a hell of a bear reaction just came in there. We've got 45 seconds left. It's pulling off now. So if the NAS goes, it will get me back up to pretty much where I was earlier. But I'm not really convinced by this price action today. It's a little bit choppy. So, but yeah, I don't know. But like I said, if it works for you, do it. Yeah. But just bear in mind that you are using the most lagging indicator that we have available to us. Price action is king because price action shows you what is happening now. Right now, the bulls are taking control of the pound New Zealand from a 2-month resistance, which has turned into support multiple times and is turning into support again. That is a signal. That is a delayed signal. Nothing wrong with it. It's just not as good as this. Look at that. Beautiful. We did on Wednesday this week in the members streams. There you go. Identifying variations of the 3-bar reversal. What we covered on Wednesday this week. That exact pattern. And that is, I would say, a B+. Doesn't mean it's going to work. It just means it's a very, very good version of it. But also, it is a propulsion gap rejection. Every time you see anything, you can talk yourself out of it. So whenever you go look at that 3-bar reversal pattern from support, someone else is sitting next to you going, what are you talking about? That's a bearish ad. Look at that propulsion move that broke that low. They just added more size. Yeah, but it's a 3-bar reversal. Yeah, but it's a bearish ad. Yeah, but it's a 3-bar reversal. What's the odds of one of those working? Someone's going to be right. But by the time it crosses that, this guy has been proven wrong. This guy was right, and he's made that much money. You are getting in after he's made that much money. So what I would say with a moving average cross strategy is when it crosses the moving average, wait for it to pull back below the moving average again and then buy it because you get a better entry. And that is part of a W pattern reversal, which is a market structure high followed by a higher low and a higher high. Wait for the best entry you can get if you're scalping, because obviously you need the best entry you can get because you've got spread to take into account as well. I've tried automated price action toolkit with candle recognition, but it's hard to set the candle sizes. Yeah, it is. The price action toolkit was designed as a manual system. Yeah. So if you look at what I say on the website about it, the whole purpose of the price action toolkit was to provide fast trade buttons. Yeah. Fast trade execution. So the idea is to use these buttons to press and adjust your orders on the fly, place quick orders. It's a scalper's toolkit. Everybody wanted it automated, so I automated it. But I never said automation was good because it's a discretionary system. So the automation on it isn't great. It's for people that read price action. We're really struggling at the highs here. I'll let it go. I can't lose. Not as much as I wanted. Yeah, so it's not great for automation. Now I'll have to find a cliff and jump. I'm just scrapping all your thoughts. Yeah. You're like my ex, that's why I left her. Yeah. It's nothing, I mean, don't get me wrong, there's nothing wrong with anything. Yeah. It doesn't matter what you do, how you do it. It's all going to work or not, right? If you use right now, if you use a 20 moving average, you're getting in there. If you use a 9 moving average, you're getting in here. If you use a 50, which is what the other one everybody loves, because everybody's a BTMM student and everybody loves using moving averages, and I can't click on it, which is really annoying because it's clicking on everything else but the moving average. Oh my God, there's so much stuff on this chart. It's doing me nothing. I'll go that way instead. If you use a 50, yeah, you're going to get in here. But when you press the button, it's either going to do that or that or that or that or that or that. Whether you make money or not is dependent on how far away you place your stop loss. It's got nothing to do with the moving average that you choose, because every single time a candlestick paints, it's got a 50-50 chance of moving up or down. That's it. So it's just that you're saying, I'll wait until it's got to the price it was 50 bars ago on average, or I'll wait to the price of 20 bars ago, or I'll wait to the price of 9 bars ago. What this is doing is waiting till the price of 3 bars ago. This is a 3-bar reversal. The last 15 minutes worth of price action tells me the bears are taking control. I know the bulls are taking control. The bears were in control on the 9. The bears were in control on the 20. The bears were in control on the 50. I know that because they're all coming down. I'm interested in now, not there, because theirs happened. This is the past. The past has got nothing to do with the future. So if we're going to take a trade, our job is to get as little risk as possible for the maximum reward we can achieve. That you need to do at the cutting edge, at the hard right edge of the chart, which is what price action is about. 3-bar reversal. Or market reversal alert. You know, the best market reversal alerts are the ones that happen in 3 to 5 bars. That one is 1, 2, 3, 4, 5, 6, 7, 8, 9. So that gives you a similar entry to a moving average cross. If that was a 3-bar or a 5-bar reversal alert, that would trigger before a 20, before a 50. It would be a fast entry signal, but it's never going to be as fast as a bearish engulfing. That isn't one, I know, but if there was a bearish engulfing, it wouldn't be as fast as that. It wouldn't be as fast as a 3-bar reversal either. It wouldn't be as fast as a 5 moving average cross. 5 MA is the best moving average to take for scalpers, because you never have more than 5 bars of price action when you're not crossing the thing. Yeah. So when price is trending down, that's your long. So that is a signal of the last 4 bars worth of price action. It's a 5 moving average. If you use a 3 MA, that would be like the 3-bar reversal in this case gave a cross of the 5 MA. But all this is telling you what's happened over the last 5 bars. I know that. I can see it. Same as oscillators. Everyone goes, oscillators are crap, because they just show you where price has been. I know, I can see it. It went up and now it's come down. And it went really far down here, but that didn't tell me the same story as that tells me. This is what ADR measures. We've come down, I can see that, but we've come down way faster than normal, which means it's probably going to bounce. The dead cat bounce. And the odds are 77% at this level. That's a good edge, isn't it? So, and this is what, PASR, I've talked about this before. price action at support and resistance. So when you get price action signals, 3-bar reversal, reversal alert, moving average crossover, whatever your price action signal is, could be as simple as just a hammer or a shooting star. As long as that happens at a price point where we've had previous reactions, the odds of that happening and working are way, way higher. But it's still not guaranteed to work. If you take a price action signal in the middle of nowhere, it's very unlikely to work because the odds are never going to increase above 50-50. If you take a 3-bar reversal there, for example, that's not a bad 3-bar reversal. It actually closed below the low of the previous bull candle. So that's pretty good. But it's only pretty good because you're in a downtrend. Now, if you stick a 20 moving average on that, or a 9 moving average on that rather, what you're going to see is a 9 moving average bounce. Actually, it's spiked up a little bit above it, but it's probably a 20 MA bounce, isn't it? This is the thing about moving averages as well. You can make them work. If I want to make that 3-bar reversal work off of a moving average, I change my moving average to a 20 and I've got a perfect system. I'll teach someone this. Look at that. Every time it pulls back into the 20, you just short it. Look at that. This is why everyone uses the 20. But the market only trends 20 to 30% of the time. So 70 to 80% of the time, this ain't going to work. So what's your risk reward ratio got to be on any trend pullback strategy? Minimum 3R. As long as you can get a 3R out of that, which you easily have here, it's all maths. Everything's maths in trading. It's all numbers. It's all to do with risk reward. Or you remove the maths and you position trade, which means that you just wait. So you either apply time or you apply price. Those are the only two things you can do to make money in a market. If you can master time and price together, fantastic. Trading. Such a party pooper, I know. I'm not a party pooper. I'd rather tell people what my experience is. But you can go off and make your own experience. Yeah. Don't, I know plenty of people that trade moving averages. I don't know if they still do, but I've met plenty of people and I've traded moving average strategies. Look at my chart. I've got 2 of them on there. I've got 3 of them now. But I've got moving averages on my chart because moving averages do work. They tell you the trend. It's bullish. I can see clearly it's a bullish market at the moment. We've just pulled back into the 72. So should I long it? No. Or yes. I don't know. I've got the 200 on there as well because everyone tells me it's brilliant. It hasn't touched it since June 24. So we're nearly a year and it hasn't even touched the thing. How useful is that? What's happened in the last 200 bars? I don't know. Hasn't done anything for a year. So if you're trading 200 moving average bounces, how have you paid your mortgage this year? You can't. So, they're useful and they're not useful. But use them. If you find it useful, carry on. If you don't find it useful, chuck it. Don't go on what anybody else says. Make your own mind up. But bear in mind what other people say, because if you can prove me right, you'll spend a lot less time figuring it out. That's all. Have a nice long weekend, everybody. Yeah, have a nice long weekend, Bucko. That reminds me, I'm not here Monday. It's a bank holiday. So, not here Monday. Back on Wednesday. Is there any good indicator for 3-bar reversal? Price action doesn't have it. No. Position trader EA does. So if you want to trade 3-bar reversals automatically, position trader EA. Yeah, you have entry signals. You've got 3-bar reversal. And you can configure the 3-bar reversal. You can configure the wicks. There are indicators out there that do 3-bar reversals. I'm actually thinking of building one, to be honest. And I'm in development. You're not in the live rooms, are you, Peter? But that's partly why we did the video on Wednesday. I'm developing an EA to trade 3-bar reversals. So they've been around for a long time. But I'm developing. I shouldn't say that. I'm developing an EA to backtest and robustness test 3-bar reversal variations. I don't know if any of them are going to work on an automated basis. I know they work normally because they do. We've got one playing out here, haven't we? Yeah. Low, high, higher low, off we go. All starts with a 3-bar reversal. So there will be lots of indicators out there for them. But the problem is not, and again, we covered all this on Wednesday, not every 3-bar reversal is the same. I have got a document here, look, which has got about 20 variations. It's over here now. 20 variations of the 3-bar reversal in it. Yeah. There's a lot of them. And this is what I'm going to build. I'm going to build an EA to model all variations and come up with a grading system. That grading system will then, if you only took the A++ 3-bar reversals, you wouldn't have many trades a year, but the strike rate on A++ is X. Therefore, we can apply risk to that. If you take all of the Bs, X. And I can then also go, right, I'll take all the A's and all the B's, but the condition is RSI extension or support resistance area. What's that do to the strike rate? So this is a great example right here. Look, 3-bar reversal at monthly support. I wouldn't do this on the 5-minute time frame. I would use a higher time frame for this. But oh, Peter's just subscribed to the private streams. Welcome to the group, Peter. Yeah, so that basically is what we're kind of doing at the moment, is looking at modeling this. But for me personally, higher time frame is better. So I'm just trying to find a decent 3-bar reversal. There isn't. I mean, there isn't any here really at all. See, that one there is kind of a C/B, because yes, we've got a lovely push up and we've got a pause, and the pull is closing below the low. It's also closing below the low of candle 1, which is great. But the problem with this one is that candle is not a high. It's part of a range. So 3-bar reversals work best at highs and lows like this. If you see a 3-bar reversal in the middle of a range, it's just price action. Not exhaustion, it's just price action. Yeah, a 3-bar reversal is an exhaustion pattern. The whole purpose of that, or that, is that there is exhaustion to the upside or downside in a bull market, in a bull move. Yeah, so the wick is the important part. And if that wick is not a high or a low, it really reduces the effectiveness. But we covered all that in that stream, which was, I think, quite a long one, if I remember. Yeah, 2 hours 14. But, you know, we went through loads of it. That's the wrong stream. Wasn't that one? It was this one. Yeah, 2 hours. It's still 2 hours. So, yeah, there we go. So this is me waffling about 3-bar reversals. So, and there's my little spreadsheet. Look, my little document. Anyway, still in it. We're not going anywhere. I'll leave it there today. So I'm NASDAQ long. This will, it's either going to be a $400 or $500 day, or it's going to be whatever, $1,000. It'd be lovely if I can get back that loss from yesterday, because that was a really whippy day yesterday. If we can get that back, brilliant. I'll be happy to get back to a break even over 2 days with this market at the minute, because it's an absolute pig. But at the moment, you can see the wicks on this. It's not really going anywhere. So that's it. If that closes out, I'm done for the day. I'm very glad I didn't take the Dow. In fact, the Dow hasn't even triggered a trade yet. Look, so we're just literally inside bar rotation on the Dow. Nothing we can do with that today. Looks like the NASDAQ's going to fail as well, to be honest. So, mediocre. I'm a member now, finally. Yes, you are. Good luck. You've now got about, I don't know, 50 hours worth of stuff to watch. That'll keep you occupied for a while. That's your weekend gone. Right, I'm back on Wednesday next week, because Monday's a bank holiday, so there isn't any Tuesday. So, using ChatGPT to help you with developing EAs and indicators. I covered that this morning, actually. Yes and no. I find it okay for certain things, but you have to have technical knowledge to know what exactly you want it to do. And the problem is, if you haven't got any coding experience, you can't check its work. Some of the code it's written for me, when I've asked it to write code, I've looked at it and gone, that's a really long-winded, convoluted way to do it. And you haven't taken into account the rest of my project. So unless you give it your whole project and it knows exactly what you're doing, you've got to tell it, it won't necessarily do what you need it to do. It will write very strict code snippets, which is good. But simple stuff, I think it'd be really good. And it has been really good. But yeah, it's useful, definitely useful. If you're a non-coder and you want to write your own EAs or indicators, it's pretty good. But it will do stuff wrong. And this is what I've found with it. It does stuff wrong over and over again. And you keep saying to it, and I've said this in my chats to it, I've said, but you did it that way last time and it didn't work, remember? Now you've given me another solution that doesn't work. And you've gone back to the previous solution because that one didn't work. So you're just giving me the same thing. We seem to be going around in circles, and it goes, you're right. Let me start again from scratch. And then it gives you the first version it gave you, which didn't work. So there's a limit to its knowledge. And I think it's more application rather than, I mean, it knows how to code, definitely. But its application of the code, somewhere it gets that wrong. So I think that's partly communication as well. If you don't know what exactly you want, it won't give it to you necessarily. Sometimes it will. You know, if you say to me, write me an EA that basically waits for price to close above the 5 moving average on whatever, place a stop loss 10 pips below the low and place a TP 30 pips above the high and trail a stop, but don't start trailing that stop until we're 5 pips in profit and trail it by 10 pips and press go. It'll write that for you. You'll place it on a chart and it will trade. But when you do a lot calculation, it won't round the pips up or down. And you won't know why, because you don't know that you need to tell it to round those pips up. So you'll get an error. You'll have to give it the error and it will go, that's probably because da-da-da-da. And for me, I'd be saying, well, why the hell didn't you do that in the first place? Because they've all got to do that, but it doesn't know that. So you end up educating it. But during the conversation, you kind of get to where you want to, but sometimes it's really hard. But again, try it. You know, and it's pretty good. But I'm not sure 100% yet. There's better coding models out there there's one called Cody, which is a coding specific AI, and that is a little bit better. But even so, I've used that and I've tried it, and I've spent half a day trying to get something done with it that I would have done in half an hour, but I've spent half a day trying to. The challenge becomes, I'm going to get you to get this right rather than getting the work done, which is not the point, is it? If I could do it in half an hour myself, just do it. I don't know. I call AI stupid eye. Yeah, for some time, I mean, sometimes it is, sometimes it's not. For MT4 codes, you might want to try Mistral chat. Better chat than GPT. Mistral AI, yeah. I haven't heard of that one, but the other one I said about Cody, that's good. The things with the AI now, they're rolling out AI for everything. So you want to pick one that's specific to the task you want done. So if there's one that does coding, that's the one to use, because it won't have just a knowledge of the code base. It will have more of a knowledge from other people using it, which have trained it. So it becomes cleverer at coding. Yeah. Whereas some like ChatGPT are very broad. They're just general knowledge AIs, if you like. So there's different, and this is what I find. Some of them, and again, this is a good example. Give Cody a paragraph, give ChatGPT the same paragraph. You will get 2 different versions of code back. Which one is right and wrong is discretionary. They might both do the job, but one might do it in a way that fits the way that you would build it better. The other one might be more restrictive, so that when you want to make changes to it, it actually has to rewrite the whole thing because it should have done it the way the other one did. These are the little intricacies which, if you code half of it in Cody and you code half of it in ChatGPT, they probably won't fit together very well. So, it's definitely got legs, and it will replace coders. I'm pretty sure. It almost has in some respects, I think. But it's as good as you. Yeah, you've still got to come up with the ideas, the strategies. If you're going to code EAs to test, you've got to come up with it all in the first place, haven't you? You can't teach AI common sense and outside the box thinking. No, you can't. And what you can't also teach it is to do the research and stuff. I mean, there's a lot of crap out there, but there's a lot of good stuff as well. So it's becoming a little bit like the internet. You've got to be able to wade through the AI stuff to get to the stuff that actually is worth using. Most of it is all right, but some of it is very bad. But I haven't spent too much time on it because I don't need to. But the speed it can code at, yeah. I mean, it codes way faster than I do. If I give it a little bit of snippet to write like 30 lines or something, it'll do it in seconds. I'll be sitting there for 5 or 10 minutes. I mean, it's quick. It's really good in that respect. For the bog standard stuff, create a list of inputs for X, Y, Z, A, B, C. The problem is I've got to type that in. By the time I've typed it in, I might as well have coded it. So if you can use voice, then maybe, yeah, it's probably faster. I don't know. It's definitely a changing world. We know that, don't we? So it's going to, God, stopped out, break even. Now it's, anyway. Depending on how you ask the question, yeah, Mistral. Yeah, so you just got to be careful. I've tried using ChatGPT to code some TV indicators, TradingView, yeah, Python, but it gives so many errors. Yeah, this is the problem, and unless you know how to fix the errors or why the errors are occurring, you need to communicate back. It's just like having a programmer, right? You see, if you said to a programmer, "Code me something," he will code it. You'll get it back and it won't work quite as you've thought. And it's because there's a communication issue. You haven't thought about it needs this, that, and the other. And then you go back and say, but it doesn't do this. And he goes, well, no, you didn't ask for that. AI is the same. It can't think what you're thinking. It does what you tell it. So if you can't tell it properly, it ain't going to do it, is it? That's the trouble. You still got to be having humans involved in some part of the process. So what's the spelling of the one you're using? Cody, C-O-D-Y. Think Cody Chat. It's by Source. It's part of SourceForge. Yeah, SourceForge. There you go, Cody. I don't know if that's the best. It's just one that I've used, but yeah. Cody. So since I keep my trading fairly simple, it was all good. Yeah. So if you've got a simple, I mean, the best strategies are simple strategies. Yeah. Don't complicate it. Keep it simple. A simple strategy will work. Yeah. There's a support. There's a price action patterns. Get in. There's nothing else to think about. Yeah. When X hits Y, do Z. Those strategies are easy to code and they are the best ones because the less moving parts you've got, when you do a back test, the less variables you've got to test, the more robust it is. If you've got 6 indicators, which have all got to line up, the variations are 6 by 6 by 6 by 6 by 6. If you've got 2, it's 2 by 2. Yeah, there's only 4 instances that could possibly happen. Therefore, simple. And if they all come out as positive, you've got something robust. This is why my strategies are simple. When a line gets below a line, wait for someone to buy it and then buy it. There's only 2 moving parts. That's it. Yeah, condition and a signal. Anything more than that, 2 conditions and a signal with a confirmation, you've overcomplicated it. There's way too many moving parts. It's not going to work. And it will work and you will find the settings that are profitable, but you have curve fit those and they will not happen again in the future. So, and it doesn't know that either, AI. So, right, I'll leave you there. It's Friday afternoon. Got better things to do, haven't we? So I'll be back on Wednesday. Anything you need, I'll be in Discord or Telegram. Other than that, Have a good weekend, long weekend, and I will see you next week. Have a good